What's going on, Moon Gang? The stock market is on absolute fire, which means that we have a lot to talk about. My name is Matt, and this channel is all about stocks, trading, and investing. This video will be split into two major parts. First, I'll be going over all the updates I just made to the public portfolio. I'm hoping that the changes I made will help me take better advantage of the volatility that I'm expecting this week. And the second major part will be much more specific to Apple. Apple has an upcoming earnings announcement, which will take place after the market closes on Wednesday, January 27th. I'll let you know what you should be looking for in that report, and then I'll be doing a full technical breakdown of Apple stock. I'll be mapping out the key price levels that will be in play for the remainder of the week. But before I get into all that, if you enjoy this type of stock market content, don't forget to join the Moon Gang by hitting the subscribe button. Also, if you want free stocks, make sure to check out the links to Robinhood and Webull in the description of this video. And now, without further ado, let's get started. Alrighty, let me quickly go over all the changes that I made to the public portfolio. As I'm filming this, the account is just below 17,000. I want you to know that a lot of these profits are not locked in. This is simply because of the extreme volatility in my current option positions. For example, at one point, the account was up to almost 19,000. At another point, it came down to 11,000. Basically, it's been a very volatile day. With that being said, I did make two quick changes to my investments, so let me quickly go over that. As you can see, I no longer own QuantumScape. I had 10 shares at a cost basis of 58. It hit my risk level today of 47, so I basically took a $100 haircut, but it did free up some capital for me to buy fuel cell energy. I now own 28 shares at a cost average of $17.99. I really like the current technical situation that FCEL is in, so I'm hoping that we could see another mini rally. Now, in terms of the options, I still have my 5 call options on NEO. I haven't touched that. I haven't touched the Zoom call option. I still have all of my Apple calls. I have all 8 at a cost average of $1.75. I'm up 165% on the position. I haven't sold it basically because I think the company's about to knock it out of the park with their upcoming earnings announcement. I think this could have a huge return for the public portfolio. I haven't touched DraftKings. I did touch Palantir. Coming into today, I own 4 call options. The one that I have left over is up 287%. And here's my reasoning for selling 3. So to create the position, I bought 4 at $2.10, so it cost me $840. When Palantir gapped up today, I figured if I could sell 1 at $840, that would be a perfect trade because that makes this overall position riskless. As in, the worst case scenario is that I would just break even. So I sold 1 at $840. And then when I saw that there was no follow through on Palantir, I sold 2 more at 7 each, which means I locked in a profit of $1,400. And right now I have 1 runner just in case the stock continues to rally. And my brand new position is a very risky one. I wouldn't suggest you guys following along with this unless you have a massive risk appetite. But I bought 2 Tesla call options, strike price of $9.25. I have 2, expiration date is January 29th. Each one cost me $16.25. This was actually an average. I bought 1 at 19, 1 at 13. As of now, I'm up 64%. And this one, I'm just basically looking to play any of the excitement as we're heading into Tesla's earnings announcement, which will also be Wednesday, the same with Facebook and Apple. So as for now, that is what's going on in the portfolio. These are all of my changes. And let's talk a bit more about what's going on specific to Apple. If you didn't catch my last Tesla update video, you should know that we're at the start of an earnings season. Earnings season is a several week period that happens 4 times a year. And basically a lot of companies are reporting how they did in the previous quarter and they're setting goals for the future quarters. All of these announcements can prompt an abnormal amount of volatility in the entire stock market. This week alone, we have some very popular names reporting, including AMD, Microsoft, Facebook, Apple, and Tesla, just to name a few. If you're curious about what Wall Street is expecting from Tesla, I'll post a link in the description below. In terms of Apple though, Wall Street is expecting an earnings per share of $1.40 to $1.50 and a revenue of $103 billion. Not only is this a record-breaking revenue expectation, but it would also mark the first quarter in Apple's history that they have a revenue greater than $100 billion. In terms of future guidance, in the last quarter, Apple really didn't set any quantifiable goals. They were saying that the global situation was a bit too variable, but we are all very eager to learn if they're able to hit 220 million iPhone units in 2021. If Apple can deliver on all these expectations, I'm fully expecting a gap up, and if they somehow miss on these expectations, I would expect a momentary decline. In the meantime though, let's check out what's going on in the charts. As a quick side note, I want you to know that I'm not the only one who thinks that Apple stock is about to explode. There are a lot of people on Wall Street who are very bullish on the company. Apple gets price target boost from Wedbush ahead of earnings. Apple is expected to deliver eye-popping iPhone unit results. Apple is expected to handily beat Wall Street's first quarter expectations this week, according to Wedbush analyst Dan Ives. He also raised his price target on the tech giant from 160 all the way up to 175, and now his bull case price target is $225 per share. Here's what he's had to say. Based on our Asia supply chain checks, we strongly believe that the iPhone 12 supercycle hype has become a reality, with this week giving the street its first glimpse of underlying iPhone 12 demand and key commentary from CEO Tim Cook looking ahead into the next few quarters. He also said that if Apple continues to execute at this pace, a $3 trillion plus market cap could be on the horizon over the next 12 months. Just so you know, as I'm filming this, it's right around 2.3 trillion. My point in bringing this up is that I fully understand I'm not the most professional source. I mean, geez, I'm talking to a camera and then I upload it to YouTube. With that being said though, I truly think that Apple is in a perfect money-making opportunity, and I wanted to bring a little bit more professionalism to it because Wall Street very much agrees that Apple could easily explode from this earnings announcement. For now though, let's switch over to the charts. We are a couple days out from the earnings announcement and the bull camp is piling into Apple stock. It managed to hit a new all-time high today, just above 145, and when the market closed for the day, the stock was up 2.7%, which puts it just below 143. I believe that I misspoke earlier. Apple currently has a market cap of $2.4 trillion, and this means that Dan Ives believes Apple still has a 25% upside in 2021. Thus far in 2021, Apple has gained 7.2%, and here is the current technical situation that Apple's in. For those of you who are new to the channel, let me quickly cover what I just added to the screen. These yellow lines are price levels that have acted as technical support and resistance, as in areas that the stock has bounced off of or been rejected by. These two blue lines are trend lines that the stock appears to be following. And on the bottom here, we have the RSI, which stands for Relative Strength Index. It's one of my favorite technical indicators, and it basically maps bullish momentum against bearish momentum. When it gets very high, that's a lot of bullish momentum, and when it gets very low, that's a lot of bearish momentum. Alrighty, let's rewind to the start of September. This was a previous all-time high for Apple. It hit 138, and this was right after the company's 4-for-1 stock split. From there was a pretty brutal sell-off, and it eventually found support all the way down at 103. From there, it kind of slowly grinded higher, and it was mainly following this bottom trend line. It would get below it, above it, below it, above it, and it just kind of continued that. More recently though, it did hit a new all-time high of 139, but this was associated with some bearish divergence in the RSI. Let me quickly explain what I mean by that. Even though Apple went higher from 139, the previous was 138, the RSI was lower. This means that there was less bullish divergence at this new high than there was here, and this is commonly then associated with a sell-off or a period of consolidation, and that's exactly what we saw in Apple. It sold off, found support at 127, and this here we see that the RSI had a chance to cool off. For about 2 weeks, it was range bound between 127 and 133-ish, and then finally it got back above this trend line. And after 2 days, it was battling it out at this top trend line, which was clearly acting as resistance. But then to kick off this week, we had a nice bullish breakout. It hit the new all-time high of 145. And at the end of the day, it pretty much closed where it gapped open to. From a technical perspective, the chart hasn't developed above 145, so I can't really call out areas of technical resistance, but I want you to watch those key psychological levels of 150, 175, and followed by 200. Of course, this means that the stock does need to get above 145, so really this is the only technical resistance. If for whatever reason Apple can't deliver on the earnings announcement, I would look for support to be found at this trend line followed by 137, and then that would be followed by the region between 132 and 133. If in an event that Apple does return here, I believe that would be a great long-term investment opportunity. As I mentioned before, I am very much bullish on Apple stock. I'm invested in it. I own call options. I think that the company is about to knock it out of the park with the iPhone 12 sales. So I'm very biased towards the stock going upwards. I just want you to know those levels of resistance and support. And you should also know that the ideal situation moving forward is not only for Apple stock to hit a new all-time high, but we also need to be watching the RSI. The RSI needs to continue up with it and ideally get above this previous spike around 74 so we don't have that same bearish divergence setup that we had between December 29th and September 2nd. Once again, we want a new all-time high and for the RSI to go higher so there is no bearish divergence. Now, to get a better idea of what the stock might do over the next few trading days, let's switch it up a bit and go over to the 4-hour chart. For those of you who are curious, the name of this charting software is TradingView, and if you want to try it out, there's a link to a free trial in the description of this video. Okay, back to Apple. So after bouncing off of this support, which was a new higher low at 112, the next battle between the bulls and bears really took place at 123. This lasted for quite a while, and eventually the bull camp was victorious, and then they pushed the stock up to the next resistance at 129, which is exactly where we saw the rejection in late August. From there, it came back down and this previous resistance of 123, 124 was turned into support, and then the bull camp used that as the opportunity to push it up to the next relative high of 139. From there, the stock sold off, and this really wasn't that surprising because as you can see, the stock was clearly overbought, and this is also when the bullish momentum gets a bit too high. Think of it almost as a clock's pendulum. When you have a lot of bullish momentum, it's very common to come back to a lot of bearish momentum and vice versa. So basically when it got overextended, overbought, a lot of bullish momentum, the stock did sell off, and then it found a new support right around 126, and it ended up forming this wedge structure. There was a perfect opportunity when there was finally a breakout above this trend line because that's a big change in trend. So basically we had this breakout at 130. You could have risked this support at 126. And since then it's rallied basically $15 all the way up to 145. Unlike the daily chart, if we take a peek at the RSI, it is already higher than this previous spike, 77 versus 82. So that makes me very happy. There is no bearish divergence on that chart. That's definitely a bullish thing. We are once again in the overbought territory, but for now that doesn't really bother me because technical analysis is very important. But when there's big fundamental events, such as the upcoming earnings announcement, it can basically get thrown out of the window for a day or two. Just keep that in mind. Just because it's severely overbought now, that doesn't mean it can't stay overbought for a couple days, couple weeks. There's no set time frame on how long this lasts, but it is something worthwhile to watch for. As this chart continues to develop, this previous resistance of 139 could easily turn into support. So depending on your own risk tolerance, you could take the opportunity to pick some up there, but the next major support will be the region between 133, 134. And in terms of resistance, the first one I'm personally going to be watching is 150. And that's exactly why my strike price on those February call options is 150. Now to quickly clarify, if you're an options trader, I'm not saying that I'm going to hold my call options to expiration or necessarily to even when the stock's in the money. I'm just looking for a nice percentage gain and I'll continue to ride the trend as long as it's a bullish one. So to quickly summarize everything I said, I am personally very bullish on Apple. The company has an upcoming earnings announcement on Wednesday, January 7th. This can be thought of as a binary event. Either the stock will gap up or will gap down. Personally, I think that they're going to knock it out of the park. I'm very much favoring the bull camp. There is a resistance at 145, but I would argue that the real resistance is going to come at $150. If they somehow miss the expectations for the earnings announcement, you should know that the closest support would be at 139, but I would recommend being a bit more conservative and waiting for the region between 133 and 134. I would love to know your thoughts on not only the changes that I made to the public portfolio, but how do you think that Apple stock will react to the company's upcoming earnings announcement? Personally, I am very bullish on Apple stock, but let me know if you agree or if you think that I'm overlooking something. If you found value in this video and you want to support the channel, it would be greatly appreciated if you could leave a comment, drop a like, and join the Moon Gang by hitting the subscribe button. All of that engagement really helps me out with the YouTube algorithm. Also, if you want free stocks, make sure to check out those links to Robinhood and Webull in the description of this video. Thanks for watching, and until next time, best of luck in the markets.